Hello everybody, welcome to Wealth Window. Today we are going to discuss the highly controversial subject of inflation. Inflation is a term we often hear, but what does it really mean? At its core, inflation refers to the rate at which the general level of prices for goods and services rises, eroding purchasing power. In 2025, understanding inflation is more crucial than ever as it directly impacts our daily lives, from the cost of groceries to housing prices. When inflation rises, each dollar buys fewer goods and services, which can lead to increased costs for families and businesses alike. As we dive into this topic, it's essential to recognize that inflation isn't just a number. It reflects broader economic trends that can influence everything from interest rates to employment levels. For instance, if inflation is high, central banks may raise interest rates to stabilize the economy, which can affect loans and mortgages. In this video, we'll explore the significance of inflation trends in 2025 and how they can shape your personal finance decisions. Whether you're saving for a home, planning for retirement, or simply trying to manage your monthly budget, understanding inflation can help you make informed choices. So, stick around as we break down the complexities of inflation and equip you with the knowledge to navigate your financial future effectively. Inflation is the rate at which the general level of prices for goods and services rises, leading to a decrease in purchasing power. Essentially, when inflation occurs, each dollar you have buys less than it did before. Common causes of inflation can be categorized into two main types: demand pull and cost push factors. Demand pull inflation happens when consumer demand exceeds supply, driving prices up. On the other hand, cost push inflation occurs when the costs of production increase, leading businesses to raise prices to maintain profit margins. To measure inflation, economists often rely on indices like the Consumer Price Index, CPI. The CPI tracks the price changes of a basket of goods and services over time, providing a clear picture of how inflation affects everyday expenses. By comparing the CPI from one period to another, we can determine the inflation rate, which is a crucial indicator of economic health. Understanding inflation rates is significant for both consumers and businesses. For consumers, rising inflation can mean higher costs for essentials like food and housing, impacting budgeting and spending habits. For businesses, inflation can affect pricing strategies and profit margins. By grasping the nuances of inflation and its measurement, individuals and companies can make more informed financial decisions in an ever-changing economic landscape. As we step into early 2025, inflation trends are showing a complex landscape that reflects both recovery and ongoing challenges in the economy. Recent data indicates that inflation rates have stabilized compared to the peaks observed in 2022 and 2023, but they remain above the historical average. For instance, while inflation soared to over 9% during the height of the pandemic recovery, current rates hover around 4 to 5%, signaling a gradual easing, yet still impacting consumer purchasing power. Key sectors are experiencing significant price increases, particularly in housing and food. The housing market continues to face upward pressure due to limited inventory and high demand, leading to rising rents and home prices. Similarly, food prices have surged, driven by supply chain disruptions and increased production costs, making grocery bills a growing concern for many households. Government policies play a crucial role in shaping these inflation trends. Central banks have implemented measures such as interest rate hikes to curb inflation, while fiscal policies aim to stimulate economic growth. However, the effectiveness of these policies can vary, and their impact on inflation rates is closely monitored by economists and policymakers alike. Understanding these current trends is essential for consumers and businesses as they navigate financial decisions in this evolving economic environment. Inflation has a profound effect on consumers, primarily through the erosion of purchasing power. As prices rise, the amount of goods and services that consumers can buy with their income diminishes. Moreover, inflation significantly impacts savings, investments, and retirement planning. When inflation outpaces interest rates on savings accounts, the real value of savings declines, making it harder for individuals to reach their financial goals. For investors, inflation can erode returns on fixed income investments, prompting a shift toward assets that traditionally hedge against inflation, such as real estate or commodities. Retirement planning becomes more complex as individuals must account for rising costs in their future financial projections. To adapt to rising prices, consumers can take several proactive steps. Creating a detailed budget can help identify areas to cut back, while shopping for sales and using coupons can mitigate the impact of higher prices. Additionally, exploring alternative investment strategies, such as diversifying portfolios, can help safeguard against inflation's effects. By staying informed and adjusting their financial strategies, consumers can better navigate the challenges posed by inflation. Inflation has significant implications for the broader economy, influencing various financial dynamics that affect both consumers and businesses. One of the most direct impacts of inflation is on interest rates and borrowing costs. As inflation rises, central banks often respond by increasing interest rates to stabilize prices. Higher interest rates can lead to increased borrowing costs for consumers and businesses, making loans for homes, cars, and investments more expensive. This can dampen consumer spending and slow down business expansion, ultimately affecting economic growth. The relationship between inflation and economic growth is complex. Moderate inflation can signal a growing economy, but when inflation becomes too high, it can lead to uncertainty and reduced consumer confidence. This uncertainty can hinder investment decisions, potentially stalling economic growth and affecting employment rates. Companies may be reluctant to hire new employees or expand operations if they are unsure about future costs and demand. As we look beyond 2025, expert predictions regarding inflation trends suggest a mixed bag of possibilities. Many economists anticipate that inflation rates may stabilize around 2–3% in the coming years, aligning more closely with historical averages. However, this outlook is contingent on various factors, including supply chain recovery, consumer demand, and global economic conditions. If these elements align favorably, we could see a return to more predictable inflation levels. Yet potential risks remain that could influence future inflation. Geopolitical tensions, such as trade disputes or conflicts, can disrupt supply chains and lead to price increases. Additionally, ongoing labor shortages in key sectors may drive wages higher, contributing to cost-push inflation. Given these uncertainties, it's crucial for consumers and businesses to stay informed about economic developments. Monitoring inflation indicators, government policies, and global events can provide valuable insights into how inflation may evolve. By understanding these dynamics, individuals can make more informed financial decisions, whether it's adjusting budgets, investing wisely, or planning for future expenses. Staying proactive and educated about the economic landscape will empower viewers to navigate the challenges and opportunities that inflation may present in the years ahead. In this video, we've explored the multifaceted topic of inflation and its significant impact on both consumers and the broader economy. We delved into how inflation affects purchasing power, savings, investments, and retirement planning, emphasizing the need for consumers to adapt to rising prices. Furthermore, we analyzed the broader economic implications of inflation, including its influence on interest rates, economic growth, and wage dynamics. As we looked toward the future, we discussed expert predictions and potential risks that could shape inflation trends beyond 2025. Ultimately, understanding inflation is vital for making informed financial decisions. We encourage you to take proactive steps in managing your finances, whether that means adjusting your budget, exploring investment options, or staying informed about economic developments. If you found this video helpful, please subscribe to our channel, like this video, and share it with others who may benefit from this information. Together, we can navigate the complexities of inflation and empower ourselves for a more secure financial future. That will wrap up this video. Subscribe and turn on notifications so you don't miss more videos related to business, personal finance, and much more.